Welcome to Mastering Mortgages, presented by Revolution Mortgage, the podcast that demystifies the world of mortgages, real estate, and homeownership. Our goal is to empower and inspire homebuyers, real estate professionals, and mortgage industry leaders. My name is Danielle, and I want to invite you to join me as I sit down with today's guest to talk about practical tips and valuable insights into the mortgage industry. Hey everybody, welcome back to the Mastering Mortgages podcast presented by Revolution Mortgage. This is Danielle, and today we are going to talk about the loan process and how you can navigate this process smoothly. We're so excited to have two industry veterans joining us today. Matt Mathias is a branch success manager here at Revolution, and we also have Greg Ocken, who is a branch production manager based in Washington State. So happy to have them on here. Let's get started. All right. Well, thank you guys for joining us today. We have Greg and Matt, and they are part of the Revolution Mortgage team. So first, just to kick it off, I wanted to start with an icebreaker. Let's see. So if you had to live in a completely different type of housing, what would you choose and why? This could be like a tree house, a houseboat, castle, Airstream, you name it. I want to hear it. And either one of you can go first.
I think I would do a houseboat so I didn't have to pay any property taxes.
Ooh,
That'd be
that's
one.
a good point.
Yeah. Plus, I love the water and boating, so that might be the one I would go with. Greg, what about you?
I love it. I'd say the same. I would be on like one of those big old giant yachts that have like maids and cooks and bartenders and stuff. My wife watches trash TV. She watches that show Below Deck. You guys ever seen that?
I love that show.
Yeah. So that would be me. I would just be with a cocktail up in the hot tub every day.
I didn't know. I didn't take it to that level. I thought like, the houseboat. I was thinking like really bare bones, blue collar. You just took it to yacht experience. So I might change mine now to living on a yacht with you, Greg.
Well, the part you missed before you jumped on this call is that corporate was actually going to pay for whatever our answer was.
Oh, there you go. Yeah. The little things in life.
In that case, I think it's going to be a raft, but sounds like you both want to be in the water, so that's super fun. Awesome. Well, that's perfect. Do either of you live by the water right now? I'm just curious.
I do, actually. I do. I think, Greg, you do too, don't you?
Wait, I thought you lived in like Ohio.
I live on Buckeye Lake, so there are lakes in Ohio.
Okay.
Yeah.
Personally, I live on the West Coast. Other people call it the West Coast. And our water is called the Pacific Ocean. It's probably a little bigger than your Ohio water.
Just a little bit. Yeah. Just a little bit.
Yeah.
Just
ocean, lake, a little bit of a difference.
You take what you're given, that's what it is.
I love it.
Awesome. Okay. Well, we can get started with some of the real stuff now. But with that, we do want to hear a little bit more about yourselves. Did you always live by a lake in the ocean? We want to know where you grew up and just how you came into the mortgage industry. So let's just start with that. And Matt, do you want to start with that?
Sure, that's fine. So I've been born and raised in Columbus, Ohio, my whole life. I started actually out as a real estate agent. That's what got me into this industry. And I actually loved being a real estate agent, but I was really young. I was only like 23 at the time. So I did it from like 23 to 27, about 4 years. I made it in the real estate industry. But I really did enjoy it. I love being a realtor. It's just, I was always working with people, helping them clean up their credit, getting them in a position to buy a home. And in that part of it really just kind of gradually over time, when the real estate market kind of softened and slowed down, I needed a little bit more consistent and steady income. And that's what really pushed me over to the mortgage industry. I took that experience of working with them just, as a real estate agent, kind of help them build their credit and get them in position. And I took those same characteristics and moved into the mortgage industry. And that was back in 1998, not to date myself, but I kind of just took that and went with it, and really enjoyed educating the customers. And, my biggest thing was people that didn't think they could purchase a home. And then I would sit down with them. We'd come up with a plan, and whether they could purchase now or whether it would take them 6 months, 8 months, 12 months, as long as they could see the light at the end of the tunnel, that was kind of my line to them, then I was going to put them on a path to get there. And that's really what really made me fall in love with this industry, honestly, was that simple part right there.
Mm-hmm.
Yeah.
Yeah.
And you might have asked more than one question on that. So if I missed one, let me know.
No, that's great. And yeah, I think a lot of times what we say in the mortgage industry is that it all comes back down to the consumer. And so
Yes.
your answer right there, just trying to help people, hopefully still get into the American dream of owning a home and how to make that happen. So that's really great. And yeah, the only other part of that question was just kind of where you're at now, but I think you kind of answered that. I don't know if you wanted to talk about that a little bit more.
Yeah, I mean, where I'm at now is, my position, I don't originate every day anymore. I'm doing more of the corporate things, but I still do originate some employee loans and friends and family, things of that nature. But, it's just a different piece of the business that I'm learning and growing in. So.
Yeah, that's great. All right. Well, Greg, what do you have for us?
That was awesome. I realized I should never follow Mathias. I probably should have started. It's no kidding. It's gonna make me look bad. I mean, he's already got the branded shirt on. I was gonna wear mine, but it was dirty. At any rate, so I grew up in Arizona, lived there 30 some years, and I moved to Washington State, and I'll never move back. I love it up here in the PNW. It's beautiful, clean air, clean water, lots of green trees. If you're in Arizona, no offense, but enjoy your brown stucco home. Like you're 99% chance of living in a brown stucco home. I just couldn't do it anymore. I was in
That's
banking.
funny. I got to throw something in there, Greg, because I moved to Arizona for 6 months, and that was my wife's number one thing. She's like, everything's brown. So you're exactly right.
Every home is a brown stucco. I could walk into any home in the East Valley and know exactly where the bathroom and the kitchen and the bedrooms are. It's like 4 floor plans times 10,000 houses with a brown stucco house. My brother lives in Arizona. This is a true quick story. He's in his house 10 years or something and needed to be repainted. He had to go to the HOA. That's the other thing. I'm not a fan of that. So as we talk about mortgages, there's certain things when we educate people. His HOA has 4 different color schemes you're allowed to paint, and they're 4 shades of brown. That's it.
The rocks are brown, the house is brown, everything's brown.
Anyways, so
and it's 135 degrees, but that's side note. Yeah.
Yes, I know. But as a kid, you play basketball in the heat and you just drink a whole lot of water and you deal with it. So then I got into banking and I did every role in the branch, your personal banker, business banker, branch manager, whatever. And then I got into mortgages. I thought, wow, this is really interesting. And I remember when I got my first mortgage, it was way back in the date. I also would rather not say, so I'm not dating myself, but no one explained to me how mortgages worked. They just said, sign here, this is how much it costs. And then so when I got into mortgages, and to this day still, because I've been in it 12 years now, that guides me on how I help people, right? Like I don't want to treat someone how I got treated, right? So I give people all their options. I let them pick their own rate. Most annoying question I ever get as a lender, the hardest question I should say, is what's your rate? And the answer is, well, I don't know. There's like 15 to 20 variables that go into your rate. And how about I let you choose your own rate? Here's a whole sheet. What rate do you want? Let's talk about, is it cost effective or not, right? Like it's putting the customer in the driver's seat, and I'm the shepherd through underwriting, because we all know underwriting has over 6,000 pages of guidelines. So I'm kind of like a guideline geek too. But it's like, hey, here's how to navigate these waters and how to get through all this stuff and keep it as simple as possible. I try to do what's called the KISS method. Mathias, have you heard of the KISS method?
Keep it simple, stupid, I think.
There you go. Keep 6,000 pages down to simple. Let's talk about income, asset, and credit. The only 3 words that matter in mortgages. And we just boom, boom, boom. Here's your choices. And then we obviously keep them updated along the way. We got an awesome CRM platform. You're going to get updates along the way, and then as an originator, I started at the big banks. I got the heck out of there.
I started the complete opposite. I started in the broker world. The smallest.
Okay.
Yeah.
And then you worked for the big banks?
And then I went to work for a big bank, correct. After about 10, 15 years into the business. So
Which
wow.
Pretty crazy, right? I mean, I don't want to throw out any names, but big banks in general, you may not want to get your mortgage from because they have something called overlays. And a lot of times they won't qualify you. They don't care how long you've had your checking account open and how many times you said hi to the teller.
Yeah.
Right? That doesn't help
Yeah.
you get a mortgage.
Yeah. No, you learn real quick about the overlays in the big banking world, which some of them are, understandable. They have to protect, their company as well. But yeah, as an originator, you would get caught off guard very quickly if you didn't become a guideline guru, like you said earlier. So I think the good originators in this business are the guideline gurus, in my opinion, the ones that really understand the little things that catch people off of guard. That helps provide a smoother process for the end consumer when an originator really takes the time to understand their craft, and that means the guidelines and all the little variants in between. So you bring up a great point.
Yeah, because really at the end of the day, if a customer, like let's say Danielle, you want to come buy a house, you're coming to Matt or myself or whoever, we're telling you can buy a house and we're telling you you're going to be qualified, but we're not the underwriter, right? Like I don't have a blank check of the company's money. I can't authorize half, $300,000, $500,000 to go out. The underwriter does. So our job is to predict what the underwriter is going to say, predict the pitfalls and the tripwires and everything you're going to hit, and package you up and put your best foot forward and address it early, to Matt's point, so it's smoother. And frankly, you make it, because there's some lenders that are call centers, right? We all watch football on TV, and sometimes you see a toll-free number come across the screen, and their job is to say yes to everybody. Yeah, you're approved. Even if you might not be, and then you go buy a house and you get all frustrated. And then, so
that's kind of like the car. It's kind of like the automobile industry. Everybody's approved until you go in there and you realize, no, actually, I wasn't approved.
Right. So our job is to avoid that and be professionals, be like, look, this is how approvals work. And this is how much you're approved for. And obviously what the estimated payments are.
Yeah. Hey, Greg, I got a question for you. Did you dive into, when you first got into business, of really understanding the cash flow of customers, like what they really could afford in the real world? Because we get caught up in, hey, you qualify for guidelines and you can squeeze into this product. But did you ever take it as an originator, like, hey, you can buy this and you can get qualified for this, but let's look at your other bills you might be paying, and that's really going to make your money tight every single month. If your furnace goes out or AC needs work, or did you dive into that? Just curious, did you dive into that kind of part of the conversation when working with customers?
I do. And it's good you brought that up because it's super important. I always say my role is to tell you what the maximum is you qualify for, but your role is to make the payment every month. So I'm going to give you various amounts and various payments to make sure it's comfortable for you.
Right.
For those same reasons. Yeah.
Mm-hmm. Yeah, that's great. I think a lot of times it does come down to what people are comfortable paying monthly, and that's going to be the bottom line. But yeah, this is all great. And I think it's a good segue to basically what we want to cover today, just about, the process and paperwork that goes into it. And it sounds like we got our gurus with us that know all the tricks and stops and what can help make the process, be a little bit more successful and less stressful. So let's just talk about the essentials of the loan process. So what are the most important items on the checklist that everybody absolutely needs when applying for a mortgage? Or is there anything that people might overlook that could hold up the process?
I mean, income and assets, right? Top two, boom, boom, right? Being able to prove your income and, what kind of assets do you have to prove for down payment funds? And Greg, you can continue on, but those are top two right off the top of my head.
Yeah. So this is a good question for me, and I have a very strong opinion about the answer. To me, there are a list of documents you're going to need for us to get you a loan. But in the beginning, when you're getting pre-approved, which is the most important part, the income calculation is the most important. Yes. If you ask any underwriter, especially like an underwriter manager or any, like we have pods at work, we have different pods of underwriters. Okay. And we'll have a meeting. 99% of the issues are income calculations. Okay. So nothing, and there's lots of different types of income. So if you're a customer, just because you make 80 grand a year doesn't mean we just put in 80 grand a year. You might have base, you might have overtime, bonus, commission, tips, da 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 da. It's a whole itemization. So what I'm getting to, which is a long way around, and I apologize, the most important thing to me, like I'll tell people, if you give me 2 documents, I can probably pre-approve you. Okay. And those 2 documents are your current pay stub and your year-end pay stub. So if you can log in and download your old pay stubs from work, if you give me December of last year plus current of this year, it'll itemize not only how much you made, but what type of income you've made. Okay. When you apply online, I'm already going to have your credit report. It'll already show me what your car payment and student loan payments are. So I don't need that from you. I'm going to assume you spelled your name correctly, but eventually I'll need a copy of your ID. But for now, let's assume everyone knows how to spell their name correctly. Okay. The assets are important. I think that is second on the list, but at the end of the day, either you got them or you don't. Okay. Yeah. So if you say you got 80 grand, I'm just going to take your word for it for now. Obviously I need some bank statements. We're going to review them, but at the end of the day, what I need to calculate is your income, and that's a year-end pay stub and a current pay stub, and you apply online and I'll get you a pre-approval.
Yeah, that's great. And also just, for people that may be listening and thinking about what their income is now, would an investment property with, a renter that they have paying them money, would that fall under income or would that fall under maybe an asset?
So if you're buying an investment property, that's certainly income, and we can use the rent. Basically, the rule is 75% of the rent received we can use towards your qualification. If it's vacant, we'll just ask the appraiser to give a rent schedule. So the appraiser says, average market rents for this property are X. We use 75% of X. If you have a 12-month lease, great. Well, let's use that. But yeah, that can absolutely be used. And then there's tons of different rules, and I don't want to get into it on this podcast, but is it a 1 unit, a 2 unit, 3 or 4? A couple different rules for 3 and 4 units, like with an FHA, for example. Then there's rules about, is it a 1 unit with an ADU? Rules about that. There's rules about if you just rent out the room, right? And that's called border income. There's rules around that. And if you want to have fun, call a toll-free number from a TV commercial and ask whoever answers the phone all the different rules, and I guarantee they won't know. And then you hang up, and then you call me or Matt, and we will tell you how it works.
Yeah. No, and that's exactly what happens. It's no disrespect to them, because some people are just new in the industry and you got to learn somehow. But typically you find the 800 numbers, the call center environments, to be the people with the least amount of experience in our industry, So and verifiable income, like, income that we can actually use. A lot of people have misconceptions, like, in their world, their money's going into their bank account every month. But is it the type of income that we can actually use to verify you for a home mortgage, right?
Right.
So we kind of battle that sometimes, just because in their mind, the consumer's mind, the customer, it's like, well, hey, I'm making this money, and it's tough sometimes as an originator. Then you got to say, well, I know you're making the money, but we can't prove it, so we can't get you qualified for that. But there's so many different programs out there now to kind of handle those type of scenarios. And I think that's what makes our industry so much fun, in my opinion, is sometimes there's a lag. Sometimes you're like, oh man, we don't have enough products to help our consumers. And then there's other times where then the doors open up and, we have every different type of product available to get somebody approved, and those are the things that it takes a guru like Greg, understanding all the guidelines and everything to say, hey, we're good. We just need to go this route instead of this route, but we're going to get you to the same place. So
yeah, sometimes I think, loans are a little bit like putting a puzzle together. You just have to find which piece goes with the other piece and how it fits for each unique situation. So,
trust, right? Getting trust with your client. And I don't think you really get that in different, like, 800 numbers. I kind of like the way Greg said that, versus trying to, say I don't like to say anything bad about any company, competition. That's my role. I never have my whole career. I just, they're there doing the best they can. I'm here doing the best I can. But, anyways, I'm going to let that one go. But
it's all about using, the tools that you have too. So they have different tools than what you may have. So
yeah, just that trust is what I was trying to get to, and I kind of sidetracked myself. But I worked really hard on that rapport and trust building up front with my clients. I really do. I want them to understand that I'm on their side. We might have to navigate and You can build a house a couple different ways, I guess. It's just I'm on their side. And once you get that trust, it's really nice when a consumer does trust you. And then they're saying, okay, well, what do I need to do then? And then you can help fix and problem solve those potential issues instead of it being, blindsided right before closing and the deal doesn't close. So
Yeah, absolutely.
trust. Yeah.
Yeah.
And it's hard for a consumer because, they don't know us from Adam when they're first maybe talking to us on the phone. So, that's always, got to build the trust.
Yeah. And to expand on that trust piece, I would say for a consumer is go ask your real estate agent. Hey, I need to get a loan. I got 100 different options. Who do you recommend? Who do you trust? Now, here's the thing, okay? That real estate agent has had dozens and dozens of transactions, and they may have worked with dozens of different lenders. So they can see patterns, right?
Yeah.
I'm comically joking about toll-free call centers or whatever, but
This is your kick today, by the way, toll-free call.
I know, I'm sorry. We're going to move on. I apologize. But that real estate agent, like, I got burned the last 4 transactions with big banks. I really wouldn't refer you to a big bank. Maybe use someone local, maybe use someone independent, maybe use someone XYZ. So basically, don't take our word for it. Go ask a real estate agent. They work with a myriad of lenders and see who they recommend.
Yeah.
Yes, absolutely. They're doing it day in and day out. So they should have a good idea there. Well, this is also just another question here, kind of relaying and tying all this together. Because I know obviously you want to build the trust and just try to prevent anything that could come up that might slow down the process in the future. But is there anything there with the paperwork or with the process that people might overlook and it could hold up the process? Just so it's something, maybe our listeners could be aware of.
Yeah, take that one, Greg.
No screenshots. I post about it on Facebook sometimes. We don't want screenshots, okay? My job is to give you $500,000 of bank money, and bank won't take screenshots. So I get like your boyfriend does and someone else does, and you can screenshot whatever, but we need full PDF. So like on an iPhone, I'm an iPhone guy. I'm sure you can use that on Android too. It's called a share button. It's like a box with an arrow pointing up. Push that button. What'll happen is it'll then email us a PDF. But that's the most common hiccup is to say, sorry, we can't take a screenshot. I need the PDF. My favorite is when they have the PDF pulled up and they screenshot the PDF. Then they text me the screenshot and I'm like, oh, you were so close. So I'll just call them up. Hey, can you go back and you see that button right there at the top or in the bottom, depending on the app, right there.
Right.
Just push the button. So that's my thing. No screenshots, push the button.
So simple, but yeah, that's great. Oh, no, I was just going to say that's such a simple piece of advice, but I could see how that would be super common, especially, I'm sure there was a time where everything was all paperwork, physical paperwork, and now that it's all digital, that's a simple mistake. But yeah, go ahead, Matt.
I started out driving to people's homes for appointments, collecting their documents at their house and bringing them back to the office. You can never get away with that in today's world, right?
No.
People would never let you take their documents out of their home. But no, just our technology. What I was going to just step in real quick. That's the wonderful thing about advancements in technology and the systems that we have at our disposal now, working for lending institutions. But our app that we have with the company has the scanner, the picture taker. You can adjust the document so it's straight. You can lighten it, darken it. And then when you send that, it literally goes right into our system securely for the processor or the originator to, put it into the proper system within our systems. But the technology nowadays really helps out. And I think it slows down those, screenshots and things that people are doing. If you just use the app, I really push the app heavily onto my customers and say, hey, let me show you how to use it. And once you know how to use it, you don't need to, fax, of course, which that's not even a thing anymore. I keep dating myself on this. I got to stop that. But, but that app, if you use that app, I mean, you tell me, Greg, I mean, for me, especially in the refinance where you were juggling a lot of files at one time, people would say, hey, can I email it to you? And they could. But I wanted it securely to go through the app. I didn't even want it to go through email. So they would laugh. They were like, do you want me to upload it through the app? And I'd smile and I'd say, please, if you don't mind. And And once people got used to it, then it was, second nature for them. But
yeah, I fully agree. Obviously, we want to be careful with when we're emailing. You don't want to email anything secure. Yeah, email any data that you don't.
Yeah, it's got to be encrypted and all that.
Right. So speaking of technology, the app is great. You can take photos of stuff, or even better still, now we have a lot of plug-in integrations where, like if we need your bank statement, you can log into your Chase account right through the app, and it'll just automatically download it for you. And it doesn't save, it doesn't steal your information, whatever. And just that one-time access to download yourself, so you don't have to push any buttons. You just log in with your normal Chase login or Bank of America or whatever to get the bank statements. It's also true with income. You need to verify income. We got this new self-verify service where you can just kind of log in where you get your paycheck, and it'll automatically import everything. So now literally all I'm asking for is your ID. And ID, you can screenshot for me. Okay, that's the one thing I'll allow you to screenshot for me. You can snap a photo of your ID on your phone and send it, and you electronically got everything else. I'm giving you loan for a house, right? Here's $500,000.
Right.
I gave you the money. You make the payment. The realtor helps find the house. Win-win-win.
Yeah.
I mean, that's kind of how it all comes together.
You said this a couple times, Greg, and I want to respond to that I'm lending you $500,000 for a house. That was my biggest thing. It's like, I used to use this line more in the 200s when I originated a lot more 250s, but it's the same concept. Somebody's lending you. I think sometimes customers kind of forget that part, and I'm not trying to downgrade it, but it's like somebody is truly lending you. I would use a joke about it. I'd be like, hey, will you lend me $200,000? And they would laugh, and I'd be like, if I borrowed $200,000 from you, would you ask some questions about maybe what my income is and how much money I have and stuff, So people just have to be realistic a little bit. Like, you're borrowing a decent chunk of change, and more than likely it's over 30 years. So, we are definitely going to look at everything and make sure that we have somebody that, we feel can, pay this money back. Right. So it's very important that consumers understand both sides. I wish there was a course, like before somebody applied for a mortgage, they could do like a 3-day course on how to properly get stuff from their bank account, from their attorney, from their accountant, like teach them. Maybe that's what we need to do a podcast on is, a 3-day class prior to application, because the ones that have all that stuff in line and know how to do all that, it really does make it easier for them,
it speeds up the process too, I'm sure.
It does, but I will say, I don't want to scare anyone away from listening. It doesn't take you 3 days to get that stuff ready. Just apply online, put some credentials. We'll get you the pre-approval that same day.
It was a 3-day class, Greg. It was a 3-day class.
Okay. I don't want people to think it's that.
I was just on the phone the other day, and I just felt so bad for this older lady. She was like, she was so excited to buy her home. She sold a home, and then she rented for a while, and then she was really trying to find that empty nester, that final resting place type home. And she just was getting so frustrated, at the technology piece. And she was laughing about it, so she wasn't upset or anything. But me, I just felt like, oh my gosh, like it's over the phone. I'm like, the button's right there. Like it's right there. Just push it, but she just, they don't see it every day. We have to be careful as originators. And I think the good originators take hold of that. We have to be careful that we see this stuff every day and we get so used to it. But you have to really, understand, like, they don't see this. Our customers don't see this every day. And maybe they don't download bank statements. They don't do that. So, we're here to help them. And we got to remember that they're not doing this every day. So it's not as easy for them as we think it is, for us. So I ended up just, driving to her home. I went back to old school days. I drove to her home and we got it all taken care of. So
hey, it's all about the
and she did close
service
on her house, by the way, and she's in it now and she's happy as a lark. I just want to throw that in there. She's a super nice lady.
Oh, perfect. Happy ending. Well, that's great to hear about the happy ending, but let's go back to the beginning of the loan process. So could one of you or both of you just talk a little bit about how the approval process is for each type of loan, and then how they kind of differ, which we don't have to go through all of them. I know there's so many different options out there, but maybe just the most common ones that you see.
The question is good because it has some it has some implied assumptions built into that question. And that is different types of loan, these different type of qualification. And the answer is this: you apply one way for every type of loan that's out there.
Yep.
Okay. You're going to give us income, asset, and credit information. Then we're going to converse and conversate with you. Say, okay, here's option A, which is loan 1. Here's option B, which is loan 2. Here's option B or C, loan 3, excuse me. And here's pros and cons about each one. But the consumer does nothing different. Consumer just provides info, and then we chew through it together.
Yeah.
Right, Matt, would you agree with
100%.
that?
No, it's the same way for no matter what product. It comes down to that documentation. So it's the main documentation that you need. And then depending on if you're doing a different product, then yes, you might need, 12 months worth of bank statements instead of only a couple months worth of bank statements. So not to scare anything, those are more kind of self-employed type loans, but yeah, all in all, it's pretty much the same applying process. And then if somebody's been, unfortunately in a divorce or there was a death in the family or something, then you might need to get some documentation to prove that. But the 3 income, assets, and credit at the beginning, and filling out a complete loan application with your proper business address and phone numbers. It's hard. We kind of skip over that sometimes, but like that is huge, right? If a customer takes the time to really get that proper documentation on the application, that really does help us out, and it protects from pitfalls down the road.
Yeah, because at the end of the day, the consumer needs to think of it this way, okay? You're providing, I always say you're providing data and you're providing documentation, okay? The data is, my name is Fred Flintstone. I work at the rock quarry and I make $100,000 a year, okay? So we're going to plug that all in, okay? But now you have to back up everything you said. If your name is Fred Flintstone, I need a government ID that says Fred Flintstone. If you work at the rock quarry, I need pay stubs and a W-2, for example, that says, you work there, right? I got 20 grand in the bank. No problem. I need a bank statement that says 20 grand. So just, tell us what you got, and then just know whatever you said, you're going to have to back up some kind of documentation. Now, to Matt's point about phone numbers, we verify, okay? We're required to. So if Matt says if my example of Fred, if Fred works at the rock quarry, that's fine. We need a phone number to call down the rock quarry and just say, hey, can you verify that Fred Flintstone actually works here? Okay, good, thanks. Boom. And we have to do that within 10 days of closing. So just because you're pre-approved and you go shopping and the underwriter gives you even the initial approval and even a clear to close and the loan documents are out and we're high-fiving everyone, don't quit your job at the rock quarry, Fred, okay? Because we're going to call within 10 days and say, is Fred Flintstone still work there? And if you quit, Wilma's going to be really pissed that she didn't get that new kitchen in the house you promised her, okay? So word of the wise is keep your dang job. I've had that happen once in 12 years, okay? Keep your dang job. We will.
Yeah, once you apply for a mortgage, I think is what you're doing is keep everything status quo. Don't do anything outside
big
the norm. Right, no big change, no big deposits, no big. I mean, you can have them, just you have to paper trail them, and they need to be from a legitimate source. So,
right.
But yeah, and did you throw in Danielle, like the pre-approval? What's important about that? Was this part of this?
Just the approval process. So not so much pre-approval. Of course, we know that the pre-approval is important before you get into the approval process of the loan that they're going to go with. But, like I said, there are a couple different loan options and some are more popular than others. But maybe, Matt, you could answer, with today's market, are there any particularly exciting programs that are available for consumers right now that are looking to buy or invest?
What that looks like?
That honestly, I'm going to throw that one back to Greg since he's in the trenches a little bit more. Obviously you have your standard conventional FHA, VA, but there are DCR loans. Like maybe Greg, you could probably touch on that.
So yeah, I giggle because it's a tough question, because at the end of the day, it's mortgages and what's exciting about a big bank loan and payments. But I do have a few favorites.
That used to be my joke with people. I'm like, oh, here's Matt calling about finances. Is everybody happy? And we'd laugh about, yeah.
Right. So my personal favorites are when you buy a 2 to 4 unit. Okay. So it's not the loan, but the property you're buying with the loan. Okay. So a mortgage is 1 to 4 units, meaning like 1 unit is just the standalone house or a duplex or triplex or fourplex. Okay. Anything over 4 is a commercial loan. That is not a mortgage. Okay. For example, if you do a VA loan, Okay, that's my favorite loan type in general. And then you do a fourplex of VA loan, it's still 0 down. So that veteran can live in unit 1, rent out unit 2, 3, and 4, collect rent to help cover the payment for the whole darn thing. Okay, super cool. Now, to dovetail off that a little bit more, not everyone has, the honor and the courage to serve our nation. So they may not be eligible for a VA loan. Okay, but maybe they have some fairly good credit and they're eligible for a conventional loan. So conventional loan also can do under 4 units, but previously you had to put a pretty sizable down payment. For example, 25% down for these higher unit properties. Well, just a week ago, right? Flashing news. This is where you do the graphic, like hot off the press or whatever. I don't know. I don't understand all this stuff, but I'm sure you'll put a graphic. Now you can do 5% down for up to 4 units. So I did here's a little plug. And if you want to edit this out, you can. I have my own YouTube channel and I did a little video about this. Okay. You can buy, even for a first-time home buyer. Okay. If you take, hold on. If you did a 50 grand down payment, I know it's a lot of money. Okay. 50 grand, but let's say parents are gifting money, trying to buy a house, whatever. And you buy a home that cost $1 million. I think that's my example. I'm pausing because I'm trying to remember the numbers on my YouTube video. Yes. You buy a house for $1 million. You put 50 grand down and you buy a 4 unit. Okay. In 10 years with the basic 5% appreciation of the house, you've now made $600,000 in appreciation. Okay. Yeah. And you got renters the whole time helping cover the payment and you get tax write-offs. How many tax returns have you seen over the years, Mathias? A lot?
Oh yeah.
And who has the most write-offs? People with Schedule E's, people with rental properties. There's all kinds of write-offs. Yeah. Right. So now, even if you live in it a year and you move out and then you rent out the 1 unit you were in, and even if the rent just covers the mortgage and you're not positive cash flow every month, you're going to get tax write-offs, which are going to help, and you're appreciating a lot faster than if you put that 50 grand in the stock market. You're only earning money off the 50 grand. But if you're leveraging the bank money, you got to think of this: the bank's giving you 95%, you're putting in 5%, okay, but you get to capture 100% of the appreciation along the way. Right. So after 10 years, you sell the house back, you pay back the bank, but you kept that 600 grand of appreciation. This is stuff I'm talking to my kids about when they're like 12 and 13. Okay. So my kids should have came on this podcast and they would have recited the same speech to you.
Drill it in.
Yes. I love that. Start them young. No, that's great. And I think that there will probably be people listening in too. They're trying to figure out how they want to invest in the real estate market and where to start. So that's definitely great advice. So let's go ahead and either one of you can start with this one. But if you could give one piece of fun and memorable advice to anyone about to embark on the mortgage journey, what would it be?
I would say to consumers at the very end, okay, at the very end, you get the keys from your realtor.
Yeah.
Okay. And I always tell people that's when you do your happy dance and the high five. But us lenders that help get you there, sometimes you forget about us. So give us a little text message high five or a little photo of you holding the keys or something, because we're not there for that key handoff, but we've
crossing the finish line. Yeah.
Through the whole process, we've learned everything about your finances and the name of your dog and the pitfalls of getting there. And we're not there at the finish line. So just give us a little something at the end, a little photo or something,
It is exciting though. Like we forget the fun stumped us, right? A little bit, just because we're in the trenches working hard to get people approved for a loan. So it's never fun for us even still until the loan closes and everything's done. But I mean, that is the fun part, right? I mean, I just went through it and I haven't been through it in a long time. We sold our home a year and a half ago, and then I just closed on a new home not too long ago. And you said it right there at the closing. You get those keys, you get it like it. Then it was so worth it, right? You're just like, oh my gosh, I'm so glad we did this, And even me with my own personal loan, I hate to say this, my wife laughs at me because she's like, you've been in the business over 20 some years and you act more nervous than a first-time home buyer, And I said, just because I've seen everything go different ways, and I get scared too. We're human too, right? Loan officers are humans as well. So, but that is the piece of advice is like, hang in there, I guess is what I was trying to get at. Hang in there. build the trust with your loan originator. Don't fight them on everything. Get them what they need to get your loan approved, because then when you close, then that's where all the fun begins, and you can start your new life in your new. Yes.
Yeah. And I just thought of one, so I do want to hop back in. I know we have time constraints too. So
no, not allowed.
No, not allowed. I will say real quick to Matt's point. Yeah. When we're asking for additional documentation, it's because the underwriter's requiring it. It's not because we're bored and we want to process and correlate and communicate more documentation. We're trying to get you the bank money, and the bank's requiring it. So just a little word to the wise there. But a fun story is, I do as a closing gift for everyone that buys a home, I buy them a U.S. flag kit that they can hang on the outside of their house with pride that they bought a new home, right? They've got a little piece of the dream. We have some marketing flyers and stickers on the outside of the box and everything else. And I had this one couple that had 2 young kids, both under the age of 10, I believe. And they were excited to get their first house, got the flag. They had the kids hold the flag up inside their house on the couch and took a picture and sent that back to me and said, Greg, I really appreciate your help getting us, the house and along the way, talking about the programs and down payment assistance and everything else. And like to this day, out of I think I'm over 800 families now that I've helped, that one is top of mind, right? Just that little picture of them holding the flag with the kids. It's awesome. Yeah. That's my favorite story.
Yeah, that's definitely heartwarming and makes it all worth it. Great. Well, we've got a lot of good things that we covered here, and just hopefully, people that are listening in were able to take some of the tips and apply that, if they are in the mortgage process, about to start the mortgage process and get into a home or start their investment journey. But just want to say thanks again for joining us. We're so glad we were able to sit down and talk a little bit more about the process and the paperwork, and just help some of the people out there that might be listening. But yeah, thanks so much for joining us.
You're welcome.
Oh, you're welcome.
We got 3 minutes before 10. I just want to real quick. I want to know Matt's favorite mortgage joke. I was excited to hear that.
Matt, that's not on my list. I don't have any mortgage jokes.
Your favorite mortgage related pun or joke. Is that not on your list?
No.
I feel like Greg's already sat and thought about this one.
Yeah, I think it's going to go back to you, buddy. Go ahead. It's not on my list, or I would. I'm going to Google a mortgage joke real quick.
Well,
unless you have one.
No, I don't. So I was hoping
I don't have any mortgage jokes.
The best.
I'm all business, Greg. I'm all about getting the job done.
To stay up to date with our podcast, please subscribe, follow us on social media, and visit our website, revolutionmortgage.com, to learn more about how we are revolutionizing the mortgage industry. We hope you enjoyed today's episode, and we'll see you next time.